TheoTrade. This is Don Kaufman. It's March 8th, 2024. There is exactly 1 hour left to the remainder of the trading session. The S&Ps are down some 13 handles. I got to tell you, though, that doesn't tell at all some of the price action story from today's trading session. Look, here's why sell-side activity is different this time around. Let's get right to business here, of course, on this weekend's update. As I was saying moments ago, so there has been a little bit of sell-side activity in the air. And yeah, the S&Ps are down some 15 handles right now. But look, people, to begin with, we reversed off of the, all-time high of 51.93, reversing all the way down to about 51.20. Now, to put that in terms of weekly expected move, just to give you kind of a feel for this, like if the marketplace, which again closes in just about an hour, but if the marketplace were to close right here, right now, it's massively unchanged on the week. You're like, yeah, what's different this time about sell-side activity is absolutely nothing. No, but there is absolute stark contrast to some of the other selling that we've seen. So let's get to work here, as I was saying, and dig into this more than just some of the price action. Like, look, you can clearly state like, all right, there's some big time price action, right? Huge reversal from some of the highs here. You know, what's 60, 70 S&P handles amongst friends. And I got to tell you, with an hour left over here, it very well may not be over. But what I want to point out and why stuff is different this time around, well, again, let's get into it. The first underlying that has got to be discussed over here, of course, is going to be Nvidia. Now, Nvidia mixed with a side order of Meta. And Meta, look, it's not one of the leading properties in here. Like, Meta is the equivalency of like Sideshow Bob at this point, but it's following, Nvidia around a little bit. But I want to dig into Nvidia. Not because it's just moving markets and not because, well, it's different this time around. Nvidia went to absolute, ludicrous movement in terms of implied volatility on an intraday basis. This one was fairly easy to handicap, that it was not only going to make a strategic move back down, but some of this movement may not be over. Let me explain exactly why. So in Nvidia, and again, this is what really started some of the reversal in the S&Ps, and there's some follow through, but let me show you a little bit deeper here. Nvidia, if we cruise over to the right-hand side of the screen, right in this neighborhood here, you'll see implied volatility of options. Forget about today. Today, oh, it's 126%, whatever. It's almost done with, right? 50 minutes left to play in the period. It's over and done with. Look at like next week. We're already actually positioning 77.62 vol. Okay. I mean, again, it's getting out of control in there, but that is not what caught my attention. What caught my attention is I could see implied volatility moving on an intraday basis and moving, as I was saying, to like absolutely ludicrous levels. In order to be able to look at this, for those of you that are interested, you cruise over to studies here on Thinkorswim, add study, go down to volatility studies, and just pull up just generalized implied volatility. Okay. So I pull up regular implied volatility, then I come over here, hit the little sprocket, come to equities, show volume subgraph, uncheck that. So what I saw this morning on the tape, kind of in real time, is implied volatility literally started to explode out of the gate. And what you have to understand is on Thinkorswim, this is not like next week's implied volatility. Look at this. Volatility is coming up right now as I'm actually recording this. This is not next week's implied volatility. This is actually a 30-day, what we term VIX style implied vol. So that's 30-day implied volatility. All right, you're like, whatever. Are you kidding me? 30-day implied volatility out of the gate is 61%. That's 61% down here. And moments later, that volatility spikes to 73%. You realize that doesn't happen around earnings, okay? In fact, to further discussion over here, to actually snap the chart to this is now a 1 year, and this actually describes it beautifully. The last earnings period, now we're looking at a daily chart, right, over the last year. The last earnings period, you can see a huge spike in volatility, but it took, days for that volatility to get there. Today, it all basically happened inside of what? A couple of moments. Implied volatility spikes, and you go, well, who cares? Like what's the difference over there that implied volatility spikes? I'll tell you exactly what the difference is. As implied volatility spikes, you look out like the 7-day, 14-day, whatever, the 0-day expirations. Do you really want to go out? Okay, if you think about implied volatility spiking, it's the calls. They have exploded. Again, the calls have exploded, okay, in terms of implied volatility, and the skew has grown massive. In fact, I'm going to open up an option chain. You can see all, okay, of like near money calls over here. And again, I'm going to highlight right over here is implied volatility. The implied vol was exploding in here to the point where no one was going to go out and buy calls. I mean, we are actually looking at stuff in the 0-day expiration. In fact, if you want, we can go look at that right here, right now. Here's the 0 DTE. There was nothing in here that was less than 100% this morning. So 100% implied volatility, and the implied volatilities just went up from there. Again, absolute, like ludicrous in terms of volatility. So in effect, what that does, when you start looking at something like Nvidia, and Nvidia has distinctly been driven by call buyers. How can you buy a call when the implied volatility in the short duration stuff flies to 130 or 140%? Truth is, you're not going to buy it. So all of a sudden, traders started coming in and doing what? All professional firms were selling it. And there was the stock. The stock just got absolutely decimated. So here's a little bit of a warning shot. And I'm spending some time on this because I'm telling you, this is the driver to the marketplace, right? So here's what you have to be concerned about. What you got to be concerned about, and again, we're back on the yearly over here, but let's snap that back to the 1 day, 1 minute. Implied volatility is still incredibly elevated. So anytime that these call buyers start rushing back into the marketplace, like they're going to do on Monday, this is where traders over the weekend, they're going to convince themselves, I got to buy that dip. And they're going to come right back in here on Monday. They're going to start buying up calls right out of the gate. Implied volatility is going to react. It's actually going to spike again. As implied volatility spikes again in Nvidia, all of a sudden, nobody wants to buy calls anymore. It just becomes, like, again, ridiculous to be able to buy it. Like, do you want to buy a call? Look at this. It has 7 days left. The at-the-money calls are trading for $33. Oh, you want to get crazy? You want to go out of the money? It's $23. And as soon as IV starts to take off, that $23 or $24 can easily become, $30. The skew in here is wildly inverted, okay? And at some point, everybody throws their hands up in the air and go, look, the juice is not worth the squeeze. And that's exactly what we saw in here. And that's why I said, sell side activity, very different this time, because it's being, that sell side activity inside of Nvidia specifically, okay, is coming by means of implied volatility, and volatility tells that story. All right, flipping around a little bit. So here we are, as I was saying, the S&Ps, let's clear that off really quick. The S&Ps, after rallying back up, seeing some, again, real degrees of volatility coming into the marketplace. But there's one interesting thing. So the S&Ps right now are down some 21 handles, right? The NASDAQ is off by about 1%, which is 200 points. Who cares, right? Like, look, this is not even like, bruised, beaten, nothing. You haven't even scratched the surface. As I mentioned a moment ago, the SPX, if we closed right now, we're literally, okay, unchanged in the week. That line right in the center of your screen, okay, the one I'm highlighting right now, that line right there is unchanged in the week. That's exactly where we are, unchanged in the entire week. 45 minutes to go though. Oh, let's see. Look, the reason I'm bringing that up is we haven't even scratched the surface. All we're seeing at this point is a bit of a rotation out of, well, the hottest, product on there. Speaking of Nvidia, again, if you actually brought up auto expected moves, which is, again, where the week start, you realize that the week started here, okay, just north of 820. We're still, okay, at 884. So if we closed right now, Nvidia still had an absolutely stellar week. To say that Nvidia, again, has even scratched the surface, okay, is not only a misnomer, it's flat out wrong. There's so much more damage that this underlying can take. And that's why I'm warning you about rotations in the AD line. So we're starting to see some rotations. And the rotations, and I talked about this in like Wednesday night video, talked about it at nauseum in the TheoTrade chat room on Thursday and Friday morning, where we could see sell side activity start to come from Nvidia and rotate back into products like Apple. Okay, rotate back into products like Google. Why? Those two have actually been hit the hardest. What you have to be careful of, though, is this. Forget for a second about Nvidia. Let's move away from the conversation in Nvidia. Let's go over to advanced decline line. The advanced decline line in today's sell side activity is positive. That's right. This is what we call selective selling. That is, there are still really good pockets of strength out in the marketplace. I mean, again, Apple's having a nice rebound over here, okay? You're actually still seeing financials kind of hold it together. As I said, there's still pockets of strength, all right? Look, that isn't sell-side activity across the board. What you have to be careful of is earlier this trading session, today, on this Friday, the S&Ps were down some 40 handles, which is doubling the loss, and the advanced decline line was distinctly positive. That leaves me very, very nervous. When you have 70 stocks, and earlier, by the way, there were 70 stocks trading to the upside with the S&Ps down, okay? There were 70 to 30 with the S&Ps. The ES was actually off some 40 handles, okay? Why is that concerning? Because that's not sell-side activity across the board. There's no correlation. Can you imagine what this marketplace is going to look like when we start to see higher degrees of correlation? You know, if we have every sector start to correlate, if financials start to actually play a role in sell-side activity, which they clearly have not. If you start to see the energy sector, which has been stellar lately, see some sell-side activity, which clearly it has not, you're going to be in trouble over here. This is a marketplace that right now, it's far more dangerous than I think people are giving it credit for. So you got to watch the rotations. And what I mean by watch the rotations and watch the advanced decline line, look, when we're still, if you will, selectively selling off, okay, we ain't home yet. Not by a long shot. We're just simply not home yet, right? And by home, I mean, like if you think this is sell-side activity and everybody's convincing themselves, don't worry, they're going to come in and they're going to buy that dip. As I was saying, they are going to come in. They're going to come in on Monday and they're going to try to buy that dip in Nvidia. And if that volatility takes off, okay, this thing's going to implode even further. It's the most dangerous stock in the marketplace, and that's why I've spent so much time, not only in this video, but on everything we're doing right now. It's a dispersion tactic, and it's an incredibly crowded trade, and you got to understand that right now what you are seeing is a rotation from Nvidia, which is, if you will, I mean, I know Apple's not up huge, and Google's not up huge, but that rotation is still like, okay, we're going to be okay, let's just rotate, okay? But in real sell-side activity, we don't rotate. In real sell-side activity, you just go, all right, let's just hit the sell button. Everybody run for the hills. And you're categorically speaking not seeing that. Why I caution? So rotations and advanced decline line, that leads me to like stuff like gold. Look, I can't give you, every reason gold is up, other than the fact that the dollar is down. But the dollar is really only be getting whacked in like 2 trading sessions. I'll give you 3 trading sessions. The dollar, though, it's not being damaged, okay? Gold makes me nervous. Gold makes me nervous because the rally in here is just absolutely immense. What does this product see? Why is trade rotating into this as heavily? And I asked the exact same question in Wednesday night video, and here we are starting to emerge into some volatility. Better think about that, because why is selling different this time? Because sell-side activity over here is being met by things like, well, volatility, which I'm going to talk about volatility in the overall marketplace in just a second. But you're also seeing defensive areas like gold being bought, defensive areas like bonds. Okay, look, bonds the last 2 trading sessions, rather flat. There's a lot of economic news out. Okay, no question about that, right? Jerome Powell, economic news, the jobs number this morning. Nobody even cared about the jobs number this morning. The jobs number was neither here nor there. It spiked the marketplace. The marketplace sold off after. It's over and done with. But bonds are rallying. This could be defensive, right? Gold is rallying. Could be defensive. Crypto and Bitcoin is rallying. okay, could clearly be defensive. Now, you could probably make a million different arguments for crypto actually rallying in there, but the latter of the two, gold and bonds, unequivocally, you've got some defensive posturing going on in the marketplace. Now I'm also going to get into very detailed why some of the sell side activity, in my opinion, is so different this time. So as we're seeing the S&Ps, again, just scraping the surface. Like, I got to be honest and say, the S&P is down 20 points. Okay, it might as well be unchanged at this point, and that's fine. But here is one thing that stands in big contrast. So as I was talking about this morning, the S&Ps were trading 51.93, and at the exact same time they were trading 51.93. Want to see something interesting? Okay, volatility was actually ramping higher. Okay, so we had volatility that started taking off just mildly out of the gate. So, bell goes off this morning, ding, 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 volatility starts to come up and then really took off. Okay, what stands in critical contrast to any recent sell side activity, and when I say any recent sell side activity, look, even earlier this week on Tuesday, we saw some selling going on, right? Markets took off. What's so interesting is today is a day where the marketplace as a whole, right, S&Ps, and I can bring up spiders, whatever, they hit an all-time high. Meanwhile, at the exact same time, volatility, okay, was also cresting higher. It was like it was the preordained sell-off over here. No, like if the market closed right now, okay, we hit an all-time high today, but if we close right now, volatility actually closes higher than it has been, okay, in really any of the recent trading sessions. And of course, we had some spikes in volatility back here where some, it was a big scary trading day. But it's really unusual to see volatility react the way it has been in just the last couple of trading sessions. Even after Tuesday, volatility never backed off in the midst of a rally. Volatility picked up throughout the course of the day. Now, yeah, of course, you're looking at this roll. Well, it backed off. Yeah, it backed off until, well, we see volatility bidding right now again. And it's not just VIX. Look, I don't love to talk about VIX, okay? I like to look at things like here, VVIX, volatility, the volatility index. So unusual to say the least, right? VVIX sees something, and yet markets hit an all-time high today. 3-month volatility, okay, at some of the recent highs. 9-day volatility, all right, right up there. Volatility is definitely picking up over here, and you got to expect that next week, again, is going to get a little bit wild. Now, volatility, okay, with markets at highs, yeah, it is unusual. Now, of course, you're going to say, well, next week is a big week. Next week is a big week. It's what we call the triple witch. If you guys are not familiar with like triple witching, basically what it means is like futures contracts, okay? This S&P futures contracts, the E-mini S&P futures contracts, they're going to roll over next week. Unless you're actually trading, okay, the contract itself, not the options on futures, but if you're trading the futures contract itself, you don't have to worry. But there's a lot of rolling going on. You can see some of the roll actually underway right now. So S&P futures contracts are going to expire. Of course, indexes like SPX, this 6-day option over here, there's massive open interest in it. It's going to expire. And of course, equity options expire. Does it really bring that much more volatility? No, not really. Okay. The marketplace, though, is definitely bidding up volatility for next week, which, of course, what's next week going to hold? You do have a CPI report coming out on Tuesday. Okay, that one's going to be exciting. Speaking of CPI coming out on Tuesday, and again, I'm just showing you Tuesday pre-market here. That's 5:30 a.m. Pacific time, 9:30, of course, Eastern time, that you're going to have CPI coming out. And when the CPI comes out, you can already see the implied volatility rather elevated for that. So that's all the way to Tuesday, March 12th. The implied volatility is already actually showing significantly more than Monday. You can see vol then picks up in the latter portion of the week, probably for a little bit of the triple witching, as well as, again, a couple of other data points that are going to be dropped on our heads throughout the course of the week. In my opinion, CPI is probably, okay, one of the big market moving events, even more than PCE data. Nevertheless, okay, we want to keep very, very mindful next week of advanced decline line. Okay, be very mindful that if you do see Nvidia start to rally again, I'm telling you, just tune into the live TheoTrade chat room. Okay, I'll give you a feel for it because I'm definitely going to be watching implied volatility on Nvidia on Monday morning because again, if you start to see Nvidia, like I would expect people are going to come in there and buy that market up. There's one of two ways this Nvidia goes. They're going to come in there and try to actually buy that dip. And when they do, I think implied volatility is going to explode and you're going to get put into another position where all of a sudden it'll rally, boom, and right back down. I'm not saying it's over and done with an Nvidia yet. And I want to make that very clear. I am not categorically not saying it's over and done with Nvidia. But in the near term, okay, you're going to go through some really rough times in Nvidia until that implied volatility calms down. There's one other way Nvidia could go, okay, given the fact that not a lot of people want to go out there and rush in to buy options, okay, at this high implied volatility, Nvidia could actually have significant gap down before, okay, people try to come in there and rush it and buy that marketplace. So it is going to be, okay, a fairly wild start to next week. Again, you got the triple witch, you got volatility, okay, picking up with markets at highs. You got the advanced decline line to be a little concerned about. I mean, look, you see markets down and the advanced decline line positive. It doesn't exactly give you the warm and fuzzy feeling because you then, I mean, you realize at that point, it's not a market of stocks. It's a market of one stock. It's the one stock market, which is exactly what I was talking about. And the other thing I was talking about in last weekend's video, when selling starts, it's going to get real out there. And right now, okay, I don't care if the S&Ps are down, 22 handles. It's getting real out there and it's getting real in a hurry. The last thing to mention, as I do each and every week here at TheoTrade, SPX expected move. So this is a wild week. So we're just about to wrap up a week. Again, you're almost 30 minutes to close, right? So we're just about to wrap up a week. You got to recognize, okay, Monday, nothing happens. Tuesday, we cracked outside the lower edge of the expected move. By this morning, we almost hit the upper edge of the expected move, only to actually pull back. And right now, we're massively unchanged. But as I said, I kind of feel like even with 30 minutes left, the day is young and this thing could get wild a little bit more. Like, again, I'd be concerned going home long over this weekend. Now, here's kind of the kicker. So you know that CPI is coming out next week, and that's going to amp up vol a little bit, right? It's triple witching, but I got to tell you, what really takes the cake, it's Nvidia. All right. I mean, it's the talk of the whole trading community right now. I'm not the only one that saw the implied volatility spike in Nvidia. Okay. Every one of my buddies that works at big, trading firms, most of these, that's all we were talking about this morning. They're like, this is it in Nvidia. There's chum in the water right now. When there's chum in the water, okay, nothing goes away. And it's getting real out there. As I'm talking over here, you can see it. Check this out. Now, this is not set in stone yet. This could actually go up or slightly down. But next week, you're looking at an $82 move. You go, who cares, man? $82. We just came off of a week that was wild. It was wild. We hit the lower edge of the expected move, almost the upper edge of the expected move. This last week was only $64. Look at this. We're moving into like an $82 expected move. Put on your big boy pants. This marketplace is ready to rumble. It is, okay? And I'm telling you right now, it's exactly why selling is a little different this time around, because volatility, it's coming, and it is going to get a little crazy out there. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.